This spring's federal budget brought significant tax changes to Canadians. So how will these changes affect you, and what can you do to save on your upcoming tax bill? Of course, the person to chat with about these questions and to find out the answers is Sheri MacMillan with MacMillan Estate Planning. Good morning, Sheri. Thanks so much for joining us. So first, let's talk about what all is changing in the tax world following the 2024 federal budget.
Good morning, Erin. Thank you for having us. These changes are quite dramatic, actually, for this calendar year, because we've been waiting to learn about whether there'd be a wealth tax or an inheritance tax come down the pipeline. And I think that this new legislation is doing so undercover. So what's happened is, instead of the capital gains taxation rate normally being taxed on half of your gain, they've just recently increased it in this new budget to be 2/3 of your capital gains tax. So it is going to have quite a dramatic impact on all of our estates when we pass on and transfer it to our loved ones in the future.
So when you talk about having an impact, I mean, who will be most impacted by these changes?
Well, interestingly, a lot of us, the budget said it's only going to impact about 1% of the population, but what they were talking about is it'll only impact us on an annualized basis up to 1% of the population. But if you think about all of us having an estate, in the year we die, it's like we've cashed out our estate in its totality that year, and so it's going to impact a great deal of us, because anything you have that you have a capital gain on, such as a stock portfolio, such as your family farm or rental properties, for example, and especially those that have businesses, it's really going to impact them. Because if you cash out your estate all at once and you have to pay an increase of capital gains tax in that calendar year, it's changed your estate tax substantially. So just to give you an example, under the current legislation, you would pay on a $10 million estate, if that was a capital gain with your business, you'd actually pay $2.4 million tax. With this new increase that starts June 25th of 2024, you're actually going to be paying $3.3 million in tax, which is an increase of almost $1 million. So this is not something to be taken lightly, but thankfully, Erin, there's things that can be done.
Okay, so let's talk about those things, because yes, that is a significant amount. What can people do to not pay these high taxes?
Well, the first thing to know is we still have until June 25th to do some crystallization and fall under the old table, which we're very busy in our office, of course, because of this. So we still have a window of time. It's not a great deal of time, but a month is still a month, and you can be grandfathered if you do the transaction before June 25th. The second thing that we're recommending families do is something called an estate freeze, and it's a wonderful technique. So let's say we just go back to that example where your estate is worth $10 million. We now create a trust in your family, and we push that $10 million of wealth into the trust. And now if the estate grows from 10 million, let's say, and grows to 20 million in your lifetime, we're not going to have to pay that additional increase in taxation on that future growth, because people die, and that triggers our income tax in our estate, but trusts don't die. And so it's a very fantastic technique that we can all utilize, and it's becoming obvious it's so much more important with these new tax tables.
Right, I was just about to say, like, the getting involved in effective tax planning couldn't be more important than it is right now, I guess.
No, being proactive is the key. And the second thing to know is Canada Revenue Agency isn't your guide in this area. They're not going to facilitate how you can minimize your tax. You do need to seek professional advice, and they don't allow you to do these types of transactions retroactively. So sadly, a lot of times people have come to me when one of the partners, one of the husbands, one of the wives have passed, but now it's too late. So we want to make sure we're doing it when everybody's healthy and able, and we want to do it sooner than later, because every time your estate grows by another $500,000 or $1 million, you could be saving the tax on that. And that's substantial when you think about it for your heirs.
It certainly is. All right, thank you as always for joining us today to chat about this.
Thank you, Erin.
And of course, there is a MacMillan Estates webinar taking place on May 30th at 6:30 p.m. If you would like to take part, log on to their website, macmillanestate.com.